Take two, part two.
All right, take two from generic background. Most generic background in the house.
Well, I've already
Right.
blown all my steam on the rant from part A,
Yeah.
so
Well, you, the last thing that we said, and of course, we'll have to really test our editing skills on this, is something about, meeting deductibles. So, one more time for the people, what's a deductible, Greg?
it is what you have agreed to pay out of pocket, in comparison to what the insurance company has agreed to pay for any given claim that they cover. So, what that means is if I file a claim on my roof, this one, we actually just got it replaced yesterday. It cost 11,000 and change to replace it. Insurance covered 9,000. We paid 2,200. That was my deductible. I agreed to pay that, so I will pay that. A lot of people will try to get out of it, but look, you agreed to pay something, just pay it. That's as simple as it is. It's a snowball effect. These people who get out of it or find ways to wrap it into their actual payout from the insurance, it just eats away at the pool of money. And when the pool of money is empty, we got to fill it back up. And guess who fills it up? Your wallet. So if you can't afford your deductible, more times than not, if you can't afford your deductible, you need to think about whether you should be buying that house. And this is specifically for new home purchases. It's just that
So,
simple.
talk about the pool of money a little bit more too, then, because what you're going to hear is a lot of people saying, "This was my deductible is 2,200. My roofer, I'm gonna tell everyone all over town about my roofer because he got it to where I didn't have to pay my deductible, and my gosh, he was just so amazing and helped save me money out of pocket." What do you say to the great 5-star Google review that this roofer just got?
So I'm going to use an analogy that I've started using. So insurance, let's use just home insurance in general. I'm going to use my company as the example, Travelers Insurance in Texas. Their money that they can pay out to fix things, to make repairs for claims, right? For claims, let's consider them disastrous events, not, hey, I have a chip in my window because a piece of hail hit it. I need to file a claim. No. Insurance is not a maintenance program. You still have to maintain your house. You can't just let the insurance company fix everything for you. But they have a pool of money that pays for claims. That pool of money is filled by your wallet and my wallet with my premiums. So let's say me and you are paying $2,000 a month, or not a month, a year for home insurance. And let's just for the sake of the argument, we pay for 10 years, no change, no up, down change. So we both paid $20,000 over the course of 10 years. That pool is filled with $40,000 in money. You file a claim on your roof. Let's say it's going to cost $10,000 to replace it. Your deductible is 2,000. Insurance is going to take $10,000 out of that pool of money, pay for your roof minus your deductible. So really only 8,000 is coming out. Now, if you find a way for a roofer to eat your deductible for you or be a zero out of pocket claim, which is illegal, I might add, now you have an additional $2,000 coming out of that pool. If you extrapolate this out to 100,000 accounts, you've got $200,000 coming out of that pool. And I want you to visualize an actual pool. Everybody who's a part of that company brings their bucket of water and they all dump it into this pool. We can all jump in it, we can all play, we can all be happy. But as soon as people start coming back and they come back with a bucket that's bigger than what they put into the pool, that pool empties. We can no longer jump in it. So what that means is when we come back around next year, everybody's bucket's got to be a little bit bigger that we dump water into the pool with. That's how insurance works. Texas has had billions and billions and dollars of claims paid out over the course of the last 5 years. Freezes, hurricanes on the coast, tornadoes. We've got houses in areas that have never been hit by weather that don't have any data. We've got flooding, all these things. We've got boomers with neglected homes. You got a roof that hasn't been replaced in 20 years. Somebody buys it, they file a claim, they get a new roof. the pool of money, there's more people coming with bigger buckets more often in the short term. This will all even out. Rates will never go down, but these big increases will slow down because the frequency of these transactions, as I'll call them, with the insurance company by the way of claims will slow down eventually. They won't stop, but the frequency will slow down. Instead of being like a claim a minute, we might have a claim every 5 minutes. And that's all expecting to stay kind of the same for the next year or so. So it affects affordability. Everyone's like, why is it going up? Why is it going up? Well, that's exactly why. Everyone else, you're not the only one who filed a claim this year. And so that money's
So
got to come from somewhere. It's not, they don't print it like the Fed does or the Reserve. They don't just
yeah,
print it and hand it to you. They have to
right. I mean,
pull it in order to push it out.
that's made up money there, talking about printing money. And
Right.
that's what's obviously caused a ton of inflation and then therefore caused some of these concerns as well, because they're having to bring more money to pay out claims because the construction costs and everything else to reduce stuff is more money. So
Right.
printing money has been a horrible, horrible thing for us. I would like to see some government accountability. I know that's never going to happen. But
No.
you know, when you run out on your credit card and it's maxed out, you don't just get the call and says, "Hey, bro, why don't you double that down for me, and I'll get back to you with an IOU." You know,
Yeah.
that's basically how the government works every time they raise the debt ceiling, but that doesn't happen to a personal level. So someone listening to this is probably hearing, you know, that's kind of bleak, man. That means that costs are going up. So, is there anything that you can do to turn it into a positive spin for someone out there that might be a first-time home buyer or was a first-time home buyer in their first home just trying to budget?
Part of it is a gamble, right? Part of it is you're taking a risk, right? The insurance company is taking a risk just as you are. You both are mutually betting on and against risk. So if you understand that wholeheartedly and you're okay with it, there's a lot of things you can do to lower your cost. You can raise your deductible, so take more financial responsibility in the event of a disaster, or you can keep shopping. But the market keeps up with itself. Carrier A and carrier F are going to be different prices, but over the course of 5 years, they're going to go like this. They're going to keep going back and forth, right? So, and all these companies have these data points. They have all these claims reports, all these histories. So, if you're in a neighborhood where everybody got their roof replaced over the course of 2 years and you don't, and then 10 years down the road, you're like, why is my insurance so high? It's like, well, because all these companies know that you guys got hit by hail and you didn't fix it. You have neglected the issue. So timing can help with that quite a bit. My own home, our deductible was going up. So our out of pocket was doubling at the end of this month. I knew we had hail damage. It was waiting as long as I could. We got it replaced. Our deductible is going to go up, which will take down our cost. Plus, I'm going to have them re-rate for a brand new roof, which should lower it even more. So timing is everything. You can time it perfect or feel like you're timing it perfect. I'm getting a little bit of a win here. Um, and I have the ability, I have the knowledge of that, right? This is my job. So trusting who you work with rather than just finding somebody who's going to give you the number you're happy with is way more important. Because at the end of the day, if you're only happy because of the number, if they can't give you that number, they can't help you. So trusting who you work with as an insurance agent or broker is the same as trusting you as a lender and trusting your real estate agent to find that perfect home in your budget. If your budget's 300, they're not showing you houses at 355, right? That's dumb. Just because they can get you a lower interest rate with a higher price becomes higher responsibilities on the back end,
And the payment still
taxes,
goes up.
insurance, everything. So there's a lot you can do. You just have to be willing to listen. And I think right now the public just doesn't want to listen. They just want to yell that everything's expensive.
Well, and they need to get involved. I've been posting a lot on my channel about local civic stuff that you can do. Remember in school, I talked about civic duty. You don't really hear that word anymore. You want things to change, you got to get in there and let your voice be heard too, to people that can actually make a difference. So me and you can sit here and tell people, hey, this is how it goes. These are the rules that we have to play by. And within these rules, we can help you to the best of our ability. Try to manipulate the rules even to try to get a better deal, but these are the rules. So if you want the rules changed, unfortunately, we're not the ones, or even above our heads, aren't the ones that can change those rules. You got to get down there to the people who have never been in our industry before that have been elected. They are actually the ones who have no idea about any of this that can make a change.
Yeah. And believe
So
it or
see
not,
what we
Texas is
really
very
understand.
favorable for consumers when it comes to insurance. People want to think
Yeah.
it's not, but
So
it is.
I had one thought and then one question. We'll wrap up. This is probably getting too long, but good information for people to know, and me too. But you mentioned shopping, it's something you can do as if we're trying to find a positive, we'll go shop, see if somewhere else might have a better rate. Even though everything's going up, maybe you can go up less. Unfortunately, that's a horrible thing to say out loud, but that's your option. Um, so the same thing, like mortgages are complicated. Insurance is complicated. You
Mhm.
have to have people who understand what's going on. Just getting a number is not going to make it work. Understanding what you're getting and why, and making sure it's covered down the road, and making sure your payments are what they are down the road. Maybe not getting an escrow account, to help save on those payments as well as something to consider because of all their different rules and percentages and cushions that they have to have. So weighing all of that up front is so important. But yeah, shopping is fine, but just because someone gives you something doesn't mean they're telling you everything. Someone literally was shopping a rate and then they told them there was no cost. I looked at it, well over $20,000 worth of costs that they weren't telling them about. So bad salesman trying to get a number, make sure you trust someone. Last question um, is uh, is shopping, right? So uh, and insurance, is there any news or anything out there that suggests that maybe there's going to be more companies into the market to help competition across the board to help with these rising premiums? And more competition may help companies get a little bit more skinnier to help us out, like in lending, in brokerage world here, there's a ton of people out there. Someone's always willing to get smaller and get you that better deal that might beat me or a big bank or somebody else. I do it to the banks because I don't have as much overhead. I'm willing to get smaller. I make a good amount of money off of that one transaction. I'm your advisor going forward for life. Everybody wins. It's a beautiful thing. What about insurance? Is there any opportunity to help on just the competition side from above? So as a broker, obviously, we both have all these different companies. I have so many lenders. You have so many insurance agencies that you can pull from. Can you add to that list, or is there anybody maybe being added to that list that you've heard of?
As far as adding companies into the marketplace here in Texas specifically, no. I mean, we've had more pull out, um, not fully, but they've essentially just closed their doors. So they don't want to take on new business because they need to sort of purge their book. They don't want certain zip codes. They don't want clients that don't have all lines with them. So whatever their parameters may be, they try to skinny up their exposure, would be how I put it. Um, and so as we've kind of continued through this year and getting towards the end of the year, we're in quarter four. Some of these companies are reopening some areas. They're getting a little less strict. Um, and on top of that, throughout this kind of rough patch this year, a lot of companies have just cut ties with some of their broker partners. So I'll use Progressive Home as an example. Progressive Home product, they really want to get away from it altogether, but they still have it. They're very restrictive. You have to have a roof replaced in the last 12 months in order to qualify. It may still not even be the best price in the market, but you also have to have your cars bundled with them. But on top of that, about 2 months ago, they terminated their partnership with 90% of the agencies that they worked with. So that means out of 100 agents that had access to Progressive Home, only 10 still have it. My agency is one of those that still does. So they're not necessarily getting better in pricing, but they're slowing the flooding essentially into their business. So with less access points, they can allow more in via my agency, our channel, because the overall number has slowed. So there's a lot of different things that are happening to somewhat stifle the upward trajectory of cost. Costs won't go down. And I will tell you that the insurance companies, a lot of this increase has been in preparation of a really bad weather year of 2025. So a lot of these companies will take on rate increases, and it's not necessarily mean your premium, it's their base rate where everybody starts at. You guys have a similar thing when it comes to mortgages. You know, if you're X credit, income, whatever, DTI, like you start here, we can work our way up and down. So insurance is the same way. Um, they have to file that with the state. So that's public record. So you can see when State Farm, Progressive, Safeco, Allstate have filed for a rate increase and what that percentage is and when it will take effect. Now, the difference is Texas is a petition state. So just because they filed it doesn't mean they have to wait for it to be approved. Once it's filed, they can actually institute it. And then if it gets denied, they work their way back. But you can see all this public knowledge. It's on Texas Department of Insurance's website. You can just search rate increases and it'll show you every line of business and every company and what the percentage is that they're going to increase their rates. So if you are with company A, you can see, okay, well, they don't have one coming up in the next 6 months. I renew 3 months from now. They're probably still going to be the best in the market, even if I do see an increase. So consuming information is great, but you have to consume it in the right place. You can't just rely on TikTok to tell you this.
Yeah,
Um,
no kidding.
so,
Well,
it's all positive. It's going in the right way. I just think everybody's so angry right now that stopping the bad isn't necessarily seen as good. People want to see it go back down, which just isn't
well,
going to happen.
yeah, there's reality, and then there's just, there's a lot of bad policy, and there's a lot of fluff, and there's a lot of layers to things that are unnecessary out there in all these different industries that cause a lot of this extra spending because everybody's got to touch it, and whoever touches it's got to get paid, and it's messy. So big insurance podcast, another good insurance episode. We may have to release this as a two-parter just for it to be a little bit more digestible.
Yeah, I
But
think so. I was going to say let's two-part it up, and that way it's 15 minutes each.
yeah, welcome. You're welcome, nerds. Here's a lot of behind the scenes info. So, in summary, the Cowboys suck so bad that I am now a Detroit Lions fan, and the Stars are off to a hot start, baby. Let's go hockey.
All right, sounds good to me.
Okay, appreciate it. That's a wrap for today.